Hello and welcome to Markets. We are Deven Choksey, the daily market podcast where we decode the Indian financial markets. Let's get started. And it being the last trading session of the week, the GIFT Nifty this morning is trading 100 points lower, indicating a gap down start for the Indian markets. The Asian markets have opened in the red, where Hang Seng and Kospi fall more than 1% each. Talking about the US market, the US futures are lower after cash market ended in the red on Thursday. The US market ended lower for second straight session following strong inflation reading. The US Feb PPI is seen at 0.6% on a month-on-month basis versus estimate of 0.3% and at 1.6% on a year-on-year basis versus estimate of 0.9%. The US Feb core PPI is seen at 0.3% on a month-on-month basis versus estimate of 0.3% and at 2% on a year-on-year basis versus estimate of 2%. The US weekly initial jobless claim falls to 2.09 lakh versus 2.17 lakh. Talking about the bond yield, the US 10-year yield rises on stronger than estimated wholesale inflation data near 4.3%, and crude is rising above $85 a barrel on supply-demand concerns. However, the gold prices are falling following a rise in treasury yields, and dollar index is seen at 103 mark. So this is how the trade setup for this morning for global markets look like. Let us now take a look at the trade setup for today's trading session. Clearly, the markets are witnessing a lot of downfalls, and one needs to be really very cautious before taking any decision in the market at present, because this is a very crucial time as we witness. The bulls staged a strong comeback, of course, in the last trading session after a day of a bear's attack. But the uptrend needs to be sustainable, and hence only a strong and consistent close above 22,200 to 22,300 area can give an upward direction to the Nifty 50 towards 22,500 to 22,600 levels. Till then, 21,900 to 21,860 may act as a support to the index, as breaking the same key support can increase the possibility of a sharp downward move. In the last trading session, the Sensex rallied around 335 points to close at 73,097, while the Nifty 50 jumped around 150 points to close at 22,147 and formed a bullish candlestick pattern on the daily charts, while defending 21,860, the key level for breaking down the higher highs, higher lows formation. Despite the resurgence of speculative activity, caution is advised as the market still appears to be in uncertain territory. It's important to observe the weekly close in the upcoming session to confirm the trend. Nifty continues to face resistance around 22,200 to 22,300 zone, while marks a breakdown level and a 61.8% retracement of the recent decline. The index might see a return of weakness in the following week. In such a scenario, Nifty could revisit the 21,900 to 21,850 zone, which corresponds to significant swings on the hourly chart and of course coincides with the 50 EMA on the daily charts. Below these levels, there could be another wave of intense selling. Currently, the immediate trading range is between 21,850 to 22,300. The broader markets also rebounded after a sharp cut in the previous session. The Nifty Mid-Cap 100 and Small-Cap 100 indices gained around 2% and 3.5% respectively. Considering all of these, let's now take a look at the key support and resistance levels. The Nifty is likely to take immediate support at 21,980, followed by 21,912 and 21,802. On the higher side, the index may face resistance at 22,173, followed by 22,267 and 22,377. Bank Nifty in the last trading session remained under pressure for the fifth consecutive session, falling 191 points to 46,790 and forming a high wave or doji kind of candlestick pattern on the daily charts, indicating indecisiveness among buyers and sellers about future market trends. The pattern also suggests that there can be a possibility of trend reversal with resistance at the 47,000 mark. Bank Nifty held on the 40-day average, which is 46,700, and the 61.8% Fibonacci retracement level, which was 46,616, and managed to close above that. We believe that the selling pressure is being absorbed, and we expect a recovery over the next few trading sessions in the case of Bank Nifty. In terms of levels, 46,600 to 46,500 is a crucial support, while 47,200 to 47,300 is an immediate hurdle. Bank Nifty is expected to take support at 46,608, followed by 46,451 and 46,196. On the higher side, the index may see resistance at 46,851, followed by 47,274 and 47,528. So these are all the important support and resistance levels for Nifty and Bank Nifty. Let us now take a look at the stock-specific news for the day. We start with Wipro, as the technology services and consulting company has entered into agreement with Desjardins to modernize consumer banking services using its Net Oxygen platform. The solution will improve Desjardins' consumer lending and credit card business. 197 Communication is in focus, as the National Payment Corporation of India has granted approval to 197 Communication, Paytm's parent entity, to participate in UPI services as a third-party application provider under multi-bank model. Under the new model, Paytm will now provide the payment service in partnership with four new banks: Axis Bank, HDFC Bank, State Bank of India, Yes Bank, who will act as its payment system provider. The next stock in focus would be Railtel Corporation of India. The company has received the work order from Odisha Computer Application Center amounting to 113 crore. Biocon is another stock in focus. Indraneel Sen has resigned as Chief Financial Officer of the company with effect from 15th of March. He resigned as CFO to pursue opportunities outside the organization. Eris Life Sciences is another stock in focus, as the pharma company has received approval from the board of directors for its agreement to acquire 19% equity stake in Swiss Parenterals from the promoters of the company for 237.50 crore. So these are all the stocks in news which one needs to consider. Let's now take a look at the FIs and DIs data. The foreign institutional investors net sold shares worth rupees 1,356 crore, while domestic institutional investors purchased shares worth rupees 139 crore on the 14th of March. So this is all one needs to consider when the market is considered and the activities are considered in the market. But like we always keep saying, that a lot of volatility is seen in the market, and one needs to understand that irrespective of these volatile market conditions, research is the backbone of successful portfolio creation. Wealth creation is an art that we understand. We at Deven Choksey have our exclusive research services which are powerful and successful. To avail our exclusive research services, we invite you to join us. Just click on the link below and you are done. Fill in your basic details and our team will reach out to you. So don't wait any further and embark on a wealth building adventure together. Thank you and have a nice day.